The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, we're totally flat on the S&P. We've been up to 2391.5, down as low as 2380.5. So we're kind of, well, we're actually flat on the day. Volume has been rather light before the last hour. Started to pick up. It just seems like we're trying to wait for one catastrophe after another, whether it's earnings or something else. And right now, of course, we're waiting on a health care bill. I don't know if it's actually going to change the market's idea of anything soon, but that should come along during the show. Then, of course, we're going to go right on to earnings after the bell, earnings this weekend, the election in France on Sunday. And it just never quits. It kind of reminds me of that Billy Joel song, "We Didn't Start the Fire." It just keeps going on. Anyway, bulls are rabid. They're foaming at the mouth. There's got to be a reason to buy. The market only goes higher. We all know that. The way I look at it, the market could go a little higher or a whole lot lower. And so right now I'm got my positions for a whole lot lower, although the odds probably whether we end up 5 points higher or lower today are probably about the same. But in the next week to 2 weeks, I suspect we have a fairly decent-sized pullback coming. 2.2 billion shares on the New York Consolidated Tape as we speak. But that's about it. There's just not that much going on in the market right now. And everybody's trying to wait for something so that the market can go higher. And we've gone on here for a week or so and not found anything that really changes why everybody should stick their neck out and buy here at the highs. There's an old saying in Wall Street that was around forever, and that was if you were on a big trader down there, if you weren't buying the highs, you just weren't trying. The idea being that no one really, if the market started to pull back, no one ever really said anything against you. But man, if you missed a move up, they were all over you. So it didn't really matter how much money you lost. It was just how long you could actually show paper profits before the bill came due. Anyway, got a lot of that stuff going on. As we said, not much movement. Yesterday, thanks for the nice emails, everybody. You can always email me at path@tfnn.com. I said I was looking for Apple and Facebook to be a little lower. Didn't quite know what to do with Tesla. That was kind of a wild card, but it is lower. We'll look at those three, and then we'll get right into the earnings tonight, because that's the next hurdle. But I do have to say, from the earnings this morning and the reactions to earnings, what we now are seeing are a lot of stocks that are not making revenues but are making earnings. And, of course, that is a lot of times they're up a little bit and then they start selling because, of course, the one thing you can't really fudge are those revenues, or it's at least tougher to fudge. So we'll keep an eye on that. But in the meantime, we got to get this party started.
That it's all just a little bit of history repeating.
And what's a decent-sized pullback? My model right now says 10 points higher or 100 points lower with equal probability. So I'm not sure what it's going to be. It's probably something we haven't thought of, something that hadn't been in the news. It seems like it's always something like that. It comes right out of left field, and you see it. But to me, yeah. Would I scream uncle, 10 points higher in the S&P cash now? Probably. But again, pretty small losses to pretty high. So we'll try to get back to it. Hopefully everybody has it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're flat on the day waiting for the healthcare bill, but I don't know if that's actually going to move the market. I have a feeling that what we should be looking at is earnings tonight, and we're going to go through those right now. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. Okay, Applied Optoelectronics. This one just kind of hanging up here with a light volume. It's got two gaps down below. You really wouldn't want to buy this thing other than it was down around 40 bucks. That's where support is. On the upside, if you had a blowout, maybe 60 bucks. Don't see a lot of juice after this last big low. Doesn't look like there's a whole lot in that one. ATVI, which is Activision Blizzard, this thing's been up on nothing for 12, 15 days. And just kind of going sideways out here. Always been waiting when this thing is going to come back down to 43, which is where this would be a great buy. The game business, as far as I can tell, has been rather lax lately, and not a lot of people buying into or buying new games just because there hasn't been a lot. Pretty quiet. I went by the game store, I don't know, a couple weeks ago, and they said the same thing. It's just not enough new games that probably maybe into September or the Christmas season when the new games generally come out, maybe they'd see a little bit more. But more and more, the games are incredibly expensive. They're spending anywhere from $150 million to $300 million to produce a game. So there aren't that many games that are really worth playing coming out. And the question is, are these things are just going to be one a year and then that's it? It had pretty good earnings last time. Just hard for me to see that this thing does not come back down to the $43 level. It may bounce a little out here, but man, it's been thin for a couple of weeks. BECN, which is Beacon Roof Supply. As I said, a lot of these stocks in the housing market starting to show some weakness. To me, anyway, what we are looking for is holding new highs. Beacon Roofing did not. It broke out without a sign of strength. It's come back into its trading range. The proof of the pudding will be tonight, so I'll be watching that one. BioMarin Pharmaceuticals, another one out after the bell tonight. Been moving up. It's had a couple of signs of strength up into this previous high of November 9th. It was 89.34. When you look at the IBB and some of these other ones, you kind of have to think that this thing went right up to 300 bucks and rolled right down. But not a lot of juice out here. Could you get to the 303.74, which is the March 2nd high? I think you can, but man, it's been a long time since there's been any juice in the IBB to the upside. Cara Therapeutics, another one. Now, this one was bouncing off the previous low of March 14th. It had a 1.5 million shares at 14.55. Went below it, closed back above it, but it did so on about the same volume. The energy off the top is a little less from this March 29th high, but the bounce today kind of giving it back after an open a little higher. So no clues in that one. Although that is, if that one disappoints, it could break through that lower range. Carbonite, again, some of these stocks breaking through previous highs on lighter volume. We were looking for 1 million shares from back on March 8th for CARB, 2150. Actually 900,000 shares. And what you ended up doing is getting up there with about 700,000 shares and closing back in the trading range. Could you get some better earnings out here? You maybe. FireEye was a little bit of a push on this thing, but kind of different companies, but backups, that kind of stuff. I don't know how long this company can do it. It seems to me this thing's in a much bigger trading range back down to 1750. CBS, kind of in the crosshairs the last few days in the news, down with heavier volume through the previous low, $61.95. January 12th, 4.3 million shares. You got into it with 6 million shares, today? And to me, I've seen some more articles about cord cutting and how it's actually into full gear. They make some money, or a lot of money actually, from cable companies that pay them to let them be on their systems. And the more people cut cords, the more that some of these big NBC, CBS, ABC, Fox parent corporations are probably going to feel the burn a bit. And I'm not talking about the politician. I'm talking about less money. Chewy's. This rather recent IPO is fairly low volume, but hasn't had a lot to talk about. 3 advancing soldiers up to $32.10 on May 2nd, and then kind of a little pullback out here. So you did have volume. You did break the previous high. Earnings tonight, light volume on the pullback so far. What do we have out here? 2385 on the S&P cash. So we'll keep an eye out here on that. But again, I think that we're just always whistling past the graveyard to the next issue. And right now, I think that's earnings tonight. Callaway Golf Company, ELY. Decent volume in the last previous high, January 25th, $12, and 1 million shares. You had 2.5 million shares not that long ago up into this one. The last couple of days, well, you already have 1.8 million shares today. It's getting into spring. I probably wouldn't want to be short a golf company going into summer. This one probably has a better opportunity to break out its previous highs than most. Even if it doesn't, the summer's going to catch up with you. So probably not a bad play, but I'm fairly bearish on the market right now. Fluor Corporation, FLR. If I'm not mistaken, these guys make a lot of water processing things like pumps and valves and gauges and that kind of stuff. This thing's just been bouncing around this low. 49.85 is the March 27th low with 1.9 million shares. It got about 1 million shares today. But again, one of these stocks that any kind of whiff out here, this thing's got a big gap at about $45, so you're down $5-6 probably instantly. Herbalife, the company that continues to trade in a very narrow, well, I wouldn't say very narrow, in a trading range. Very tough to see how this stock ever breaks out above. It's always been a short play. I'm wondering whether or not that play has been worn out. Through the previous high, February 15th, $62.50, 2 million shares, got through there with no volume and kind of pulling back into the trading range today. I suspect over the long term, if the market is pulling back, this is headed to 48. LC, which is a lending club, this thing was brutalized. And what do I mean by brutalized? Well, we just keep having to go back to see how much higher this thing was. An IPO not that long ago, December 18th, 2014, $29.29. Now, of course, this thing's trading around the $6 level. It blew up back on the May 9th of last year. The CEO kind of doing some illegal stuff. I think it was illegal. Haven't heard about him going to the pokey yet. But those things tend to take a long time. Made some deals with his buddies and gave him some loans and some other stuff. So there was a lot of hanky-panky going on. Again, a lot of these companies were based on the idea that interest rates were going to go up dramatically. It looks like, we may get 1% this year. I think they thought a lot more on this one. Again, one of these companies where, if it actually gapped down, would probably be a better sign. This has got one of those, for the most part, kind of lower highs, higher lows thing going on for a while. But I don't see a lot changing it yet. We'll be back after the short time out.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had an email to just briefly talk about commodities, and I didn't have a real good entry. I was going to just play this because it's basically my thoughts on the whole commodity sector. And what do I mean on that? It's just a rolling auction. It's looked like that since this morning. Every pop has been sold, and I don't see anything changing. 45.29 on the S&P cash. And the problem you get into, since we haven't had this in a while, is the ability for these things to just have a life of their own. And you get 2, 3, 4 of these days down, and everybody buys, and then by the end of the day, they have to sell. And you get this rolling auction of just lower prices until there's some kind of climax. I haven't seen anything that makes me think that there's been some kind of selling climax in crude, in gold, in any of the other commodities. And, of course, even Dr. Copper is down 3.5 cents today. So I just don't see anything out here, especially going into a weekend. Tough for me. I told somebody last weekend, one of my subscribers was asking me something. I said, as long as I see those Baker Hughes numbers go up every Friday, it's going to be very tough for me to figure out that crude's going anywhere higher. What were they up? 10, 12 rigs last week. There was some very good-looking charts out there that I played, 2 weeks ago or whatever it was, 2.5 weeks. Didn't bounce much, but thank God I sold and got out of them before the thing turned around on me. But it was, the charts look beautiful, and they all turned horrible. And, of course, the most bearish thing is a good-looking bullish setup that goes south. And that's exactly what happened on crude. Probably kind of the same thing in gold out here. You had a kind of some bullish setups. In fact, yesterday I sent a list of Gartley patterns to Steve Rhodes just for a kind of a second opinion out there. Man, you had 4 or 5, maybe 6, 7 stocks in the gold sector that all had Gartley patterns forming on them, and not a one of them looked at all like there was any kind of reversal signals on them. And I wouldn't be short gold here, but when you see a lot of those good patterns turn south, you always get, it seems like you get something like this, which is a big day down, 1228 on gold right now. But to me, the one that kind of scares me a little bit more than anything is the crude, and that's why I suspect that we have more downside in this market than upside. That is that 30% of the S&P correlates to energy. And, without about a $5 raise in that, I don't see where higher prices come in this market. So we'll continue on with that. But a lot of people talking commodities here. I kind of look at it from afar. 2388 on the S&P cash, which is flat on the day. So, again, not a lot happening. We talked about Lending Club. Let's go on to LOCO, L-O-C-O. Oh, I did tell Andy Heck that I thought crude would be free in a week. Maybe Andy's in the den here. Maybe he'll comment on my comment. El Poco Loco. Free crude for everyone. El Poco Loco, L-O-C-O. Again, a lot of these stocks, as we've said, are into lower highs and higher lows. This is one of those making those patterns. If you got a big breakout to the upside, I certainly would sell it. To the downside on lighter volume if this would break out. You basically want to fade whatever move comes in this from this chart, but of course use judgment. Mercado Libre, which is kind of a payment system for South America, has done nothing but go straight up. And especially other than the 3rd of April, this thing has been going up on light volume for that time. No real signs of strength. No sign of selling yet. But again, this one is priced for perfection. They don't come out with the goods. Look for them to do a Tesla, T-S-L-A. Question in the email whether or not I'd be short Tesla. I would love to be short Tesla. Again, I need to see the short interest come down. We've broken under the 3x3 displaced moving average on this. What I would like is a close back above it on light volume and then a close back down, and I would pull the trigger again. So I have a feeling this one may just extend itself out here. We have some decent volume on the downside, but I'm with as heavy a short interest in this stock. You want this thing to come back up once again. Don't have many people short it and have very light volume. So I think, could it fall apart right now? It certainly could. I just don't see the risk reward of chasing it to the downside now with the heavy short interest. Monster Beverage, of course, all these that we've been talking about, pretty much earnings after the bell. Now, this one's come down to its sign of strength and done so on light volume and started to pull a little higher up here. But, there's been no volume from this March 2nd high down to really this May 2nd low. But, again, the last 2 days have not been huge volume to the upside either. So you may have a lot of the bounce coming out of after the bell. And, of course, is there anybody making a soda or a drink right now that if it's not healthy isn't getting clubbed? That would be the worry I'd have.
This Sunday, May 7th, the French elect a new president and markets and currencies around the world react. Tom O'Brien has just launched a special for Market Insight subscribers where he'll be hosting back-to-back weekend webinars to break down the market action as France votes and futures react. This Sunday night, May 7th at 5:45 p.m. Eastern Time, Tom O'Brien will host a special webinar as France votes and markets and currencies around the world react to the implications on the future of the EU and worldwide indices. The following Saturday morning, May 13th, Tom O'Brien will host a second live webinar for Market Insight subscribers at 9 a.m., breaking down the previous week's trading action following the election of a new French president, as well as what to expect as we approach summer trading. New subscribers will also receive a free copy of Tom's best-selling book, The Art of Timing the Trade, and this offer comes with a 30-day money-back guarantee. All the action starts this weekend, so sign up now at the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed With Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, this is Dave White. I'm back on the phone. I don't know what they expect me to do. I can't show any pictures, can't do anything, so I guess we'll just talk about broad subjects out here. Wanted to talk a bit more about earnings after the bell. I guess since you're not going to be able to see any of this, I have to describe it. Kind of like the days before we had any of this. Of course, well, I don't even have that, so hang on a second here. Okay. I got no charts. I got nothing. I got nothing to tell you, nothing I can show you. So I'm not exactly sure what we need to do, but I have a feeling that music might be in order. Let's try to see if I can't get this fixed. We'll ask the engineer to play a little music, maybe into Tom's show. But I don't know if there's anything we can do here other than that. I'll let the engineer take it away with some music, and we'll see if we can't fix this and come back for the last segment.
Internet problems today. Wanted to had some email during my aforementioned break here. Wanted to ask me about what I thought about Microsoft and their rollout of their PCs yesterday. Market's kind of been pulling back a little bit, of course, on the tech side. The laptops look pretty good. I haven't seen one yet, of course. The reviews are not in. They're really just kind of showing these things off. I don't know if it's going to make that big a deal overall, but they need to continue to push that market, because, of course, no one else will. Down on a little bit lighter volume out here today. Don't see any indication that you'd want to short it. Maybe if the market pulls back, 66.75 would be a target to take a look at that one. A little bit more. I had a few other questions out here about Apple. And, you know, you really didn't have much of a pullback out here. You certainly had the full court press on CNBC. Yes, we can skip the last break if you want. I don't know. What you can do is take a look at this doji out here today. They kind of whiffed on numbers. When we looked at Skyworks Solution SWKS, they whiffed on earnings, and a lot of people have been talking about them missing a third quarter. The 28th of April, Skyworks came out with theirs and came down. Volume started to pick up. There's some continuing discussions that they're going to miss third quarter, and Apple will be into the fourth quarter of shipping the iPhones. And no one really said anything that would put that away. The question is, how long do you want to wait for the big next upgrade cycle for Apple? And when you look at the suppliers out here, they could be making at least some minor ABC downs. If the market would pull back, I don't see Skyworks having any problem coming back to about $83. And again, a lot has to do with the tax issues, whether they can repatriate a lot of that cash in Apple, and how long people will hang on to it. If I was somebody like, that had a ton of shares out here, there's probably never been a better time to distribute stock than now. And that is, for a long time, you're going to have the promise of all that cash coming back, and maybe to the particular people. The particular people that are out there. And I had a question in the den. It says, care to comment about Kramer hyperbole this week in San Francisco and how great tech is? They certainly, it makes easy TV. And Kramer is one of these guys that will love you one day and hate you the next. But he's always been one to kind of glum on to certain individuals he thinks are on the way up. If you look at his trading style when he was a trader, both at Goldman Sachs and later, the books that the people around him wrote about him said that he was always the inside guy. Most people, if you remember Elliot Spitzer, the Attorney General of New York, who got into trouble, a great deal of or the reason that Elliot Spitzer got to the level he was Jim Cramer dumping a lot of extra good trades in his account to make good with him. He thought he was going to take it to the next level, and of course had failed. But Cramer's very much one of these guys that's the inside guy, and it seems like he was trying just a little too hard. If you got to sell somebody, if you really got to beat them into buying it, it always seems to be kind of a sign of a top, a little bit too desperate to say that Apple was going higher, some of these other ones. But the fawning fancy that is that man's show at 6 p.m. every day just seems to be rather hit and miss. Doesn't seem to be a lot of thought, a lot more theater. So I would say that probably the biggest thing to me was that he couldn't get people to pile on. He couldn't really get and buck the trend, even though he beat his drum as hard as possible. But I don't know. He's got 3 stocks that really he likes being friends with the 3 CEOs. Salesforce is one, Apple is the other, and I guess there's a bunch of also rans. But he was really pumping Salesforce and Apple last night with a CEO interview. I understand you got to fill some airtime, but at the same time, if you're making calls on the market and you're trying to be friends with the people that you cover, seems to me kind of a unwinnable job. And that's the position he's in. He also has money in a charitable trust that he trades, but of course people follow him and he makes money by running it up and down. He's just been one of these guys that's kind of a usual Wall Street kind of guy. But I would say that the biggest thing was he went out there that at the same time Facebook and both Apple have kind of whiffed. We also see Tesla kind of pulling back. I could see that we've hit probably some kind of at least short-term high, if not a medium-term high in some of these tech stocks. And you see a lot of what happens on TV happen at the highs, like not TV ads, but the top story of the day is somebody claiming that the Dow is going to 40,000 now. You tend to see a lot of those. What I don't see right now, especially on the financial infotainment stores, are a lot of discussions about any chance of the market going lower. And that's generally when the market tends to head a bit lower. So and what else can you say about it? We've got a lot of warnings after the bell tonight. We'll see how those things play out. But for me, again, just looking at the earnings this morning, looking at the earnings last week, we've seen some beats and some losses, some bigger losses in some stocks. But what seems to me is the pattern is most of the stocks are not blowing out the highs with revenues. They may have a lot of EPS numbers. But again, we'll see stocks, there were 2 or 3 of them this morning, that had fairly decent EPSs beat by 6%. And then you looked at the revenues, and man, were they just $1 over what people were looking at, or they missed them altogether. And that continues to be one of the big signs that you may have a market pullback coming. So I would just be very, very careful out there with the market. Mr. Market, by the way. Got to see up there. I've got 2388 on the S&P cash. Volume is one of the lighter days that we've seen for a long time. To be in the first week of May with and turning just 2.6 billion shares on the NYSE consolidated tape kind of has to make you a little nervous. We pushed a little higher, went a little lower. Everybody's thinking that there's one more leg up into this market, and that's normally where you start seeing these rare black swan events that come out of the ether. I would be incredibly careful now with any long positions, probably through options expiration. I think we could have a rather large surprise, mostly just on the back of looking at Facebook and Apple and the rest. So be careful. Do I even have a clock up here? I think we've got, about a minute left. Is there anything else I wanted to look at before we go into the end of the show out here? Just the light volume probably more than anything today is really bothering me. Of course, then we go tomorrow. We got a little more earnings, but of course the election in France, I can't see a lot of people getting in front of that. In fact, I can see some people looking a little differently than you and I think about it now. And that is that maybe a election going the way everybody calls it means that they bring a little bit more cash back over to Europe. That means that they sell some stuff here in the United States. Does that selling, maybe starting on Monday or maybe even starting today, start to weaken this market, thinking that maybe the EU has a little bit better chance of holding together? I think it's just a matter of time before it falls apart. Maybe it's later than sooner. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.